Welcome back. In just about 3 months, oil prices have taken a serious hit of more than 50%. This is a 17-month low point for the oil exporters. Everyone these days is getting a rescue plan, and Opec has decided it also wants one. And hence, in an attempt to devise a plan to counter the impact of the global financial crisis on oil prices, Opec has rescheduled its mid-November meeting to the 24th of October. This emergency meeting is likely to result in a cut in oil production. It could be as large as 1.5 million barrels per day. In light of the current financial circumstances, will this move make the situation even worse? Well, Gordon Brown has raised serious concerns. He's the British Prime Minister, saying, "I think it's absolutely scandalous that OPEC is thinking of meeting in the next few days to cut oil production so that they can push up the price of oil again, and we will certainly try to prevent this from happening." He added that it would be wrong for the world economy for OPEC to cut production and therefore keep prices high. Well, still with us are our guests in Paris, Francis Perrin, in Dubai, Piyush Mathur, and in Washington, D.C., Flint Leverett. Flint Leverett, if I could come to you first. We heard Gordon Brown there saying that it's scandalous, but why should the oil-producing countries not protect their own economies effectively by cutting production and trying to raise prices?
Yeah, I mean, I understand why Western politicians will use this kind of normative language, right and wrong, it's scandalous, it's not right. But your question, I think, is right on point. You know, these countries have their whole economic futures at stake here. They also, many of them, make a plausible argument that if you have an oil price that is too volatile, that shoots up too high and then shoots back down too low, in that climate, it is very, very difficult for oil producers to make the kinds of long-term investment decisions and commitments of capital that all of us need in order to keep oil production growing in the way that it needs to grow to accommodate demand, not just this year or next year, but looking down the road 5 years, 10 years, 20 years.
Francis Perrin, could I bring you in on that issue of where it's the threshold of the level of oil prices? For certain countries, the suggestion is they need it to be at a particular level, otherwise it becomes uneconomic for them to bring the stuff out of the ground. Is that an argument, do you think, that holds water at this time?
Oh yes, definitely. It's an important argument. You see, in order to meet world oil demand, we need production from many countries, many sides, many fields. And these countries and these fields have higher or lower production costs. If you take the case of Saudi Arabia or Iraq, of course, we have the lowest production cost in the world. But if you take the case of oil sands in Alberta, in Canada, you have production costs which could be between $60, $70 or $80 per barrel. And we need all this oil production in order to meet demand. So it's perfectly right in economic terms to say that there are dangers, including for consumers, perhaps not today, but tomorrow and the day after, in having very low prices. It will discourage investments from private companies and from national oil companies in difficult reservoirs. It will prevent them from drilling deeper and deeper in greater water depths and so on. We must never forget that in the last few years, the oil price has risen tremendously, but the production cost of oil has risen in a very significant way too. And we cannot today have prices we had in 2004 and 2003 with $20 to $30 per barrel. Now it's not sufficient in order to bring the desired balance between world oil supply and demand.
Piyush Mathur, I saw you nodding just there. What's your view on this, whether OPEC should actually intervene over this issue?
Well, I believe, my question is very simple. In any scenario, when the demand goes down, what do you do with the supply? And I believe that, there is a significant decrease in demand, and it's likely to remain there for a while. This would lead to, production coming down. Now, those are the normal scenarios. Obviously, there's a lot of politics involved in this. But in a normal situation, this is what you would do.
Flint Leverett, it's fair enough, though, isn't it, that point about politics, because the oil prices have historically always had a relationship with politics and what people are trying to do with them.
Sure, and that relationship exists on all sides for consumers and for producers. Your quote from Prime Minister Brown earlier reflects that. Oil prices are coming down. How dare producers do anything to stop that downward slide? But of course, we do want them to keep making all of the investments that they have scheduled to make, so that we can make sure there's all the capacity we want in the future. And just as consumers want, in a sense, assured supply, producers want what is in effect assured demand for oil. And right now, the dialogue between the two sides over what really are the long-term needs of both sides is really very underdeveloped.
And presumably, Francis Perrin, certain governments in areas where they've been getting a huge amount of money for their oil, some people have actually based their budgets for the future on a particular price. So presumably it starts to mean that they might have to cut back on certain spending, health programs or whatever, which will then impact on ordinary people.
Yes, you are perfectly right. Several OPEC member states have been rather cautious in the recent past, basing their budgets on prices, let's say, of about 60 to 70 US dollars per barrel, but we are at about 70. But some of them have been much less cautious, and I refer in particular to, within OPEC, Iran and Venezuela. These two countries have increased a lot their public spending over the past few years on the basis of high prices and prices which could become higher and higher in the future. And these two countries now within OPEC are the countries which are in the most difficult situation, and it's not a coincidence if Iran and Venezuela were among the first within OPEC member countries to call for an emergency meeting and to call for a cut in production in order to reverse the present trend in prices. But if prices continue to go down, even states which were much more cautious in terms of public spending will be hit now or in the near-term future. So it's really a challenge for OPEC and for also non-OPEC producers, of course.
Flint Everett, if I bring you in on that issue, the question of Iran and Venezuela that were just brought up there. In the US election, both candidates are promising to try and reduce dependency on foreign oil, particularly from the Middle East, particularly from countries like Iran and Venezuela, within 7 to 10 years. And it's something that politicians have liked to promise for a long time. Do you think it's realistic, or is that simply political grandstanding at this stage in an election?
It's political grandstanding. There's no reality to it. I mean, the United States does get a significant amount of its own oil consumption from Venezuela. We don't get that much of our oil from the Persian Gulf, and we get none of our oil from Iran at this point. And so to say that you're going to eliminate U.S. dependence on Middle Eastern oil really makes no sense in a global market. You're going to be dependent on Middle Eastern oil in the United States every time you import something from China. Every time you import something from Japan, you're implicitly importing Middle Eastern oil along with that. And so I mean, I think that is simply political rhetoric that has no grounding in economic reality.
Piyush Mathur, the prospects, do you think, for the global economy with oil prices coming down, do you think it's broadly good or bad for the economy?
I think we have to see this in totality. It's not just about the fuel prices; it's about everything else that's happening out there. I think there is a lot of buzz about fuel prices, and there are discussions that are happening on fuel. We, as Nielsen, track the buzz online, and in Australia, for example, we saw this buzz go up like 150%, and people are actually talking about what they would do given these fluctuating fuel prices. They're not very sure that this reduction in prices is really permanent or is going to stay for a while. They believe that this could go up again, and they've already started cutting down on their expenses. And when the consumer doesn't spend, it's not good for the economy.
OK, on that note, Piyush Mathur, thank you very much indeed. Generally a consensus that there is uncertainty still in the global economy as well as oil prices. Thank you all. Francis Perrin in Paris, Piyush Mathur in Dubai, and in Washington, D.C., Flint Leverett. Thank you all for your time. And thank you so much for joining us on this edition of Inside Story. We always welcome your comments and suggestions. Please email them to us at insidestory@aljazeera.net. Bye for now.